Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, November 18th, 2025. Video number 2 of the day. Typically, the frequency of my videos will kind of mesh with how, what's going on, whether it's the stock market like it is today, or if I'm trading commodity, crude oil or gold or something very actively, then I'll, if there's a lot of movement and a lot of opportunities, I'll do more videos. Anyways, let me just get this one out to you. And if you are new to the site, keep in mind that I will often follow up under a homepage post with little updates that don't warrant a homepage post, especially active trading stuff. For example, when T5 was hit at the lows today, let me just go there and pull up that chart. T6 on the futures. I already covered that in the other video. Almost a perfect tag, nice reversal. And so I gave you some bounce targets, or I said I would follow up. I had an arrow going up, and that's what I'm doing now. Let me show you the targets I gave you. So it's here on the 5-minute chart. And what I'll often do is follow up in the comment section. So there it is, minimum target. You can see it on this chart. Here's a target zone. You have a nice downtrend line coming in. Again, this is a short-term chart, but this is where I expect the first reaction today. Probably here. If they step in early, they might step in here around 603.75 up to about 605 and a reaction. But the reason I want to do this video is to, continue to reiterate what I've already said earlier, is there's a potential for a lot more potential again. So, by the way, I put that chart under both of the last 2 posts just so you wouldn't miss it if you're checking in. So just go into the site, refresh the page every now and then. That's how I'll try to catch up on your comments. I'll just have the home page here and I'll just note how many comments. And then every now and then hit refresh and you'll see if any new ones pop up. Or you can also subscribe if you like a certain thread, certain topic. You can subscribe to new follow-up comments or reply to your own comments. So if you make a comment, let's say you ask me a question, a chart request, and I reply to it, then you should get an email there. All right, so let's dive into just real quickly. I already did a pretty detailed analysis earlier as to why I covered all shorts and went long. I wanted to just reiterate, this is a 60-minute chart. 60-minute has kind of always been my favorite swing trading time frame. And in bull markets, I like to see, before I cover shorts, positive divergence on the 60-minute charts, ideally of both the futures and the index tracking ETFs. When I'm talking about if I'm trading QQQ, I'm also looking at SPY. They're very closely related. A lot of the same top holdings. SPY is just a little more diversified, a little less tech heavy than QQQ. But you do have positive divergence. And in bull markets, this is usually the marks the end, quite often, not always, of a correction. And again, it's the technical catalyst for a move to new highs. Now, let me reiterate, we have a lot of technical evidence. I've been, looking for a major top for a while. We have a lot of evidence now, more than we had previous, divergent highs with sell signals on the shorter term charts. There's still some work to go. One of the big things is we have to get down below the 200. There's a lot of work to be done. And including and not limited to this area, this candle right here that I've been talking about forever and a day since the day it happened. That was October 10th. That we need to take that out to open the door to a much deeper correction and at least a back test of the 200-day moving averages, which come in with this daily chart here. So bottom line is, you have to respect these divergences. In a bear market, what happens is bullish divergences get plowed through quite often like they're not even there. They'll either start to get a nice rally going and it looks and feels great and smells great, and then all of a sudden out of nowhere they come in and sell it. Look, guys, the big wild card is going to be NVIDIA tomorrow. They're either going to make or break this. If this market is going to new highs, NVIDIA will most likely be the catalyst. Well, this will be the technical catalyst. NVIDIA earnings, if the market likes what they're selling, could take this up. And I say this, I know, again, that there's some, ardent bulls out there that, and I'm not trying to poke on you guys. I'm trying to say, here it is. This is if you're buying dips, because a lot of the bulls on not a lot, there's a couple, they tend to come out when the market makes new highs after a correction with the I told you so. So I'm showing you this is a divergent low. We're still holding above support on the daily. It is a support level I think is going to go. So right now I'm just picking up nickels in front of a steamroller. That's my plan. But if you pick up enough nickels, it adds up, after a while. So again, I'm in active trading mode, or just kind of reacting to the charts, if you will. So there it is on QQQ 60-minute chart, as well as the 15. We have the divergence. This is the 60 of SPY. We have as well right here, hourly chart, positive AK bullish divergence. I know I have a lot of lines on this chart. Let me just clean up some. Well, let's just leave it. I just want to point out the divergent lows and say that we're also still holding. This was almost a test, a near test, and they may want to run it down one more time to shake out some of the weak hands, test it again. But again, this level could go, like I said, I don't think it's going to go until NVIDIA reports. So my best guess, and this can change on a dime based on what I'm seeing, and I'm pouring through the charts. I'm pouring through the indexes, SPY, QQQ, NQ, ES. I'm looking at them on multiple time frames, 5-minute charts, out to right now the day. I know where we need to go to change things on the daily or weekly, so I'm not overly concerned right now today with the weekly. We'll see where we're at on Friday. And let's not forget, just to kind of recap, we have had let's see, go back here, the sell signals I was looking for. So this is the overriding factor. So that's why I think this 60-minute divergent low is probably going to be a bull trap. If we get a rally that gets a little more traction, we need to turn green. We haven't turned green today yet, or tomorrow. But I think we'll do it today before the close, is my guess, and probably build on those gains sometime until tomorrow. And then if we get high enough, you'll get the profit taking from folks like me that bought the lows today or wherever they're in. But let's not forget the bigger picture, because this very, 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 very much goes into my analysis. And that is this trend line, the uptrend line right there on SPY has been broken. That came after the bearish engulfing on the weekly. And I've been waiting for it, talking about it, predicting it, and it's come. The bearish PPO crossovers on the weekly. Last week it was finalized, meaning we did have the crossover. That's a red histogram. That means the PPO had made a bearish crossover last week, which is still very much intact this week. And it would take a pretty sizable rally to undo it and make this prove last week's signal to be a whipsaw. Remember, this bar right here on the histogram will not be finalized to 4 p.m. Friday. But like I said, it's pretty deep. It's much more, it's buried down lower than the one last week. And every now and then you will get a whipsaw, keeps the current trend intact. But then, flip back, give you a sell signal right here. And it, got you short through that. Well, other things, had us short. We were shorting the break of this trend line here. We got in early, just like we did now on the 60-minute chart, et cetera, et cetera, et cetera. So, all right, so wanted to mention that is a kind of bigger picture thing. That's not QQQ, that was QQQA. There's QQQ, and QQQ also has flipped. And like I said, work to be done. We have some sell signals which have the potential to prove to be, trend reversal. That's what a bearish engulfing candlestick is, a topping stick, just like that one was, and it very much proved to be a top, followed by a 26% drop. And we'll see if this one is or not. All right, so back to the shorter term charts, 60-minute charts, positive divergence. Like I said, you can look at it any way you want to, and I know most people do. I'm trying to keep open-minded about this. And at the end of the day, to go home, again, we'll see. Between now and tomorrow, maybe a lot happens on the charts. Maybe something crazy goes on, but I don't expect anything too crazy. I don't expect any big change in the technicals. And therefore, I still plan to go home Most likely, as of now, I'll let you know otherwise, mildly short, long at the moment, looking for a bounce. It's probably going to carry into tomorrow, and looking to most likely close that out and reverse the VIX and the NQs that I did by reversing, meaning when we hit T6 today at the lows, covered those shorts, as I said, went full long, and did the same thing, reversing out of the VIX from a long to short, even in the swing accounts. Why? Because again, if I think it's final target's a final target. That's why I list multiple targets. Final near-term target is where their RR is no longer, especially with the holding support on the daily chart and everything I went over in the first video. Again, I think a tradable bounce is likely enough that it's worth it to harvest gains on those, even the swing positions, and get back in at a more favorable price after milking any bounce if I get it. And if I don't, look, even if we undercut today, if it's not by a lot, I've been putting a big weighting on these lows from October 10th right here. But again, if we undercut it today, close slightly below, anything is possible. Something could break in the financials. You could see a big hedge fund unwind, blow up, start unwinding positions. So, you got to have your stops wherever you're comfortable with. But my point is, I think even if we went down, undercut the lows by a little bit, again, the market's probably going to hold steady somewhat until NVIDIA reports. And again, NVIDIA, like I said, never took out. I went over the other video today. These levels change by the end of today. If we smash down through, and I get alerts popping off, I gave you those levels, the blue lines on the 60 and daily, 60-minute and daily charts, and most of those key stocks are still above those support levels. So that's that. Let's go back to the chart, try to gauge the bounce. Well, there's NQ. I know mostly. I don't know who's trading today. I haven't had a lot of comments, but. I'll do these for myself because it helps when I talk through it. And I might see something that I haven't seen before, but that's it. So off the lows, coming into today, it was a drop down to T6 of, I think 2% at the lows. Where were we? Let me just see here. 15-minute chart. There's yesterday's close. So it was a 2% drop followed by a reversal and a bounce so far of about 1.66%. And if we get that's where yesterday's close was. So, and that's also, you can see those. I have it here. There's you probably can't see it. There's 4 dashed yellow lines that represents yesterday's close. And so we go green if we hit that level or get above it. So that means that the 2% low would have been, the drop so far, early session drop would have been recovered. And again, that's where they're likely to step in and start selling and take some profit, pull back to where, again, it'll be a combination of a lot of things, where support on the market leading stocks are, the S&P 500, everything else. And then if they do that, especially if we can park it green today, anything above yesterday's close, then you'll probably see this trend line get taken out. Whether it's in the overnight session in the futures or tomorrow on QQQ, and we could get another bounce up to, it would be a gift, I think, if we can get up to about 612.76 before NVIDIA reports because remember, whatever you take home tomorrow at 4 p.m., you're stuck with, unless, sell it in after hours before NVIDIA reports. But so let's just say up to the close, that'd be a 3.6% move. And again, still keep us well below our initial sell signals, which are way up here. And so, again, good area to enter. And then if we start popping through each of these resistance levels after NVIDIA, I'll address it at the time, let you know my thoughts. Okay, so I just wanted to share my bounce targets. Again, bounce target 1, 2, 3, up to here by tomorrow. I'd be happy to see anything here or higher today would be great. Really firm up that reversal off that key support, that 6th and final near-term target on NQ. And The only other thing I wanted to, I just caught up to an old reply that I missed. I usually go back to the last couple posts. Somebody asked UNG, but I followed up since they asked that question. I posted a link. I just covered it in, was it yesterday, I think, in a video, and gave you my thoughts. This is the daily chart. So we're back to that T1. This is really nice support. I like this level. I like this as a re-entry on natural gas. I said it yesterday. And so I just wanted to say, and I'm willing to see it come down here, but not below that level. That's where I start stopping out and saying something else is going on, that this whole breakout above this basing pattern failed, right? So as of now, looks good. A lot of meat on the bone on the daily chart. I gave you my longer term charts of the grains as well. This is just a 60-minute chart of a UNG. Had a little divergence, typical reaction off my third price target. Still think if we, this is where we start to hit as we start to move up here. If we do, it's what I call the escape velocity, where just natural gas can really start running. Without the pull of gravity. Gravity is sellers that keep stepping in here. It's kind of like, the analogy is used, rocket ships when they break into that part far enough away from the Earth's atmosphere where the gravitational pull is no longer pulling them back then. And that's kind of what you get here. And then the grains, I already gave you long-term charts today. So that's it. What else do I have for you? Nothing, just that financials are still holding the support on the daily chart, which was triple support, 200 simple exponential, and the 5132 level. Again, so these are all reasons for at least, and that's what we have so far, at least a bounce. I think it has the potential to be more, but there's that ginormous question mark tomorrow at 4 p.m. after the close, whenever it is NVIDIA reports after the bell tomorrow. Where do we go from there? Ultimately, this is what I favor. Like I said, I told you I'll position accordingly, nothing heavy. You want to, position heavy, long or short, bet on NVIDIA. It's a gamble. You can do it, but you're better off going to Vegas. At least they'll give you free drinks. Your broker's not going to give you a free drink. You're either going to be very happy or very upset. So, but you can always add to a position. Or subtract, if short, if you take a starter short and then financials break down, QQQ takes out, QQQ and SPY both take out the October 10th lows. As long as it's not too big of a gap down, you can always add there. All right, I'll wrap it up here, get the video out to you, and if anything changes, I'll let you know. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.